Well, it's been a crazy time for the market, so I thought I'd better give you an update on where we are. Okay, this is where we are with the S&P 500 now. This is the daily chart, and because it's the daily chart, I want to draw on this. We have fallen off a fair bit, and you can sort of see the level of falls a bit more clearly. It sort of brings us only back to October of last year before we get too excited that the falls were massive, or in another way, it brings us only back to July of last year. So whilst the falls, while they were happening in January, seem steep, they're actually not that steep, which is what the case is being made by some of the more pessimistic people who think there should be about a 50% drop in the market, which would mean going back to about, well, around here-ish, which again would only be around 2020 levels. Okay, I don't think that's likely to happen given the level of corporate profitability. The issue next becomes, well, what is going to happen? What's the more likely scenario? Well, I'm afraid with the MACD falling like this, I wouldn't be looking to get in yet. I need to see the weekly stochastic rising, and I need to see the MACD flat or rising. Okay, simple as that. So I'm the kind of person who would probably wait until the market has gone up closer to that kind of formation, just because, yes, you might say, well, you're getting in a bit late then, aren't you? Well, I'm not trying to bottom fish or catch a falling knife, because probabilistically, that's really dangerous. Nasdaq, similar kind of outlook. So again, that what felt like a deeper fall, a massive fall rather, only really brought us back to where we were in July, arguably closer to where we were at the start of 2021. So it's not that deep a fall. What would a 50% drop, I'm not saying it's going to happen, look like in this? Well, we'd be somewhere down here, just below 2020 levels. So again, 50% sounds big in one regard. It's not that big at all. Again, that's falling too sharply for me to want to get in right now. Individual stocks, fine, if they show a more positive momentum. And what's a positive momentum? Well, stochastic rising, MACD flat. Okay, on both if I'm trading off or investing off the weekly charts, then on the monthly charts, I'll need to see that as well as on the weekly before I'd look to get in. But individual stocks, that's a different story, okay? FTSE's been holding up, look at that, which is unusual. Now, the danger here is it's below its dotted signal line, and for those who don't know, that could mean it could have a bit of a scare first, goes down before going back up. Let's look at the weeklies on this one. Fairly flat, but the stochastic's low. So there is obviously, well, it doesn't take a rocket science to tell you, there's some selling pressure, but it's been the more attractive index. Does that mean you should buy into it? Well, no. All I'm saying is there's some selling pressure, there's some downward pressure. We know this. But overall, the trend is fairly positive in there. The Dow, similar to the others, but I've said so nothing new, just, please refer to my previous answer. Hopefully you found that all helpful. Have a look at my campaign for $1million.com, which teaches more people how to invest and invest through a lot of free resources that I provide there. Thank you very much, including my YouTube channel and my Telegram channel. So go on those.